So, the UK's 2025 budget has landed, and believe me, it is packed with changes that are going to directly hit your wallet. To help us cut through all the noise, we've teamed up with the experts at Pro Tax Accountant. They've put together this entire analysis focusing on two massive shifts, capital gains tax and a brand new wave of green taxes. Seriously, if you own any kind of asset or you drive an electric car, you need to listen up. Getting this wrong could literally cost you thousands. Let's break down exactly what this means for you.
Yep, you heard that right. The entire rulebook for how your assets get taxed has basically been rewritten, and some of these changes are happening, well, right now. So if you're a small business owner in Manchester thinking about selling up, or maybe you're a freelancer in London with some shares you were hoping to cash in, the next few minutes could be absolutely crucial. This isn't some problem for down the road, it's happening as we speak.
Look, tax law is ridiculously complicated at the best of times, and this 2025 budget is no different. That's why we've brought in the experts at Pro Tax Accountant. They've done all the heavy lifting for us, they've crunched the numbers, they've analyzed the policies, so that we can give you a really clear, straightforward guide to what's changing, and more importantly, what it all means for you.
All right, here's what we've got on the agenda. We're going to start with the huge shakeup in capital gains tax. That's the most immediate change. Then, we'll get into why the government is doing all this. After that, we'll switch gears and look at the new green taxes hitting UK roads, which, trust me, will affect millions of us. And we'll wrap it all up with a clear action plan that you can actually use.
Okay, first up, capital gains tax, or CGT for short. This is where we're seeing the most immediate and honestly the biggest changes from the 2025 budget. It's creating a whole new landscape for anyone who owns assets. So whether you're an active investor or you just have one valuable thing you might sell someday, this next part is definitely for you.
So what is it exactly? Well, to put it simply, if you sell something for more than you bought it for, that could be shares, a second home, a piece of art, or even your whole business, the government takes a slice of that profit. That slice is the capital gains tax. It's all about taxing your wealth, not just the income you get from your job. And in this 2025 budget, the government has decided that slice is about to get a whole lot bigger.
And here it is, the first major bombshell from the budget. Just look at the numbers here. The rates have jumped a lot. For basic rate taxpayers, the tax on your profits has shot up from 10% all the way to 18%. And for higher rate taxpayers, it's gone from 20% to 24%. Just think about that for a second. If you made a $100,000 profit, your tax bill as a higher rate payer just jumped from $20,000 to $24,000, basically overnight. And the craziest part? This change kicked in instantly on October 30th, 2024. No warning, no grace period. This is the new reality. Now, if you're a business owner, you're probably sitting there thinking, okay, what about me? Well, the changes for you are just as dramatic, but they're being rolled out over time, which creates a very, very urgent situation. Stay with me because you really need to see this.
For years, entrepreneurs have had this amazing tax break called Business Asset Disposal Relief, or BADR. It's huge. It lets you pay a super low 10% rate on the first £1 million of profit when you sell your business. Well, the 2025 budget is basically put a ticking clock on this relief. From April 2025, that rate climbs to 14%. Then, it jumps again to a much steeper 18% in April 2026. This isn't subtle. It's a clear signal from the government. They're giving you a window to sell at a lower rate, but that window is closing, and it's closing fast.
And check this out. Here's a pro tip from the analysis by Pro Tax Accountant. The Office for Budget Responsibility, that's the UK's independent money watchdog, is predicting a massive 60% spike in business sales this tax year. That tells you everything you need to know, right? Thousands of owners are scrambling to sell their companies and lock in that 10% rate before it disappears forever. This is creating an incredibly crowded market, which means if you're thinking of selling, you need expert advice to make sure you stand out. But wait, it doesn't stop there, and this next one might be the biggest surprise of all. If you've ever thought about an employee ownership trust, an EOT, you need to hear this. The government used to offer 100% tax relief for selling your company to your employees. It was an incredible incentive. Well, the 2025 budget has slashed that in half. It's now just 50%, and that takes effect on November 26, 2025. This is a total game changer for anyone who is planning an employee buyout. It just became a whole lot less attractive. Okay, so with all these tax hikes on assets and businesses, the big question on everyone's mind is, why? Why is this all happening right now? Let's dig into the government's official reasoning, because if we understand the why, it helps us see what might be coming next. The government is framing these changes under this big banner of fairness. The official line, and this is a direct quote from the budget report, is all about making the tax system fair and fit for the 21st century. Okay, but what does that actually mean in the real world?
Let's break down what fairer actually means to them. First, they want to close this huge gap between the tax you pay on work, your income tax, and the tax you pay on wealth, which is CGT. For decades, it's been way more tax efficient to make money from assets than from a salary. Second, and this is no surprise, public finances are under a lot of pressure, so they simply need to raise more cash from asset sales. And third, they're trying to crack down on tax avoidance. Stopping people from taking a tiny salary but huge share options just so they can pay the lower CGT rate instead of higher income tax.
All right, let's pivot from assets to asphalt. The 2025 budget didn't just stop at investments. It also rolled out a whole new wave of green taxes. And this is going to completely change the financial game for drivers all over the UK, especially for anyone who bought an electric car thinking they'd be free from road tax forever.
So let me ask you, do you drive an electric car to save on tax? For years, that was a massive selling point, right? The government made them exempt from road tax, vehicle excise duty, to encourage people to buy them. It was a major incentive, and it worked. It really helped kickstart the EV revolution here. Well, this budget is basically the government saying, job done, because that tax-free ride is officially coming to an end.
So, get ready for a new acronym in your life, EVD. That stands for Electric Vehicle Excise Duty. This new tax is now officially on the books, and it's scheduled to start in April 2028. It really does mark the end of an era for tax-free EV driving. And yeah, 2028 might feel like it's a long way off, but this policy is now locked in. It's going to fundamentally change the long-term running costs of owning an electric car.
So how is this whole thing going to work? Well, the big change, step 1, is that we're moving to a pay-per-mile system. Then, as you see in step 2, fully electric cars will pay a rate that's about half the fuel duty of a normal petrol car. And step 3 shows that plug-in hybrids get a bit of a break, paying half of the full EV rate. And here's a little did you know for you, fuel duty brings in over £25 billion a year for the government. As that money disappears with more people switching to EVs, the logic here is pretty simple. They're bringing in EV fee to make sure that all drivers, no matter what they drive, are chipping in to maintain the roads.
Okay, we have covered a lot of ground, from selling assets to paying road tax. Now we get to the most important part. What does all this actually mean for you? And what on earth should you do next? Let's pull this all together into a clear action plan based on the great analysis from ProTax Accountant.
This slide really sums it up perfectly. If you're a small business owner, that April 2025 deadline for the BADR rate hike is a huge deal. Acting now could literally save you £40,000 in tax on a £1 million gain. For investors, the takeaway is simple. Your future profits are going to be taxed more heavily, and that might change how you think about your investments. And for all you EV drivers out there, the era of tax-free driving has a firm end date. You've got to start budgeting for EV from 2028.
Let's just do one final quick recap of the key dates you absolutely need to have burned into your memory. The new CGT rates of 18% and 24%, they're already here. The EOT relief gets cut in November 2025. Business owners, your most critical date is April 2025, with another hike coming in April 2026. And EV drivers, circle April 2028 in your calendar. That's when EVSD kicks in. These dates are now set in stone.
Okay, before we finish up, it's really important that I say this. Everything we've talked about today is for general guidance only. The tax system is incredibly complex, and everybody's financial situation is different. These new changes from the 2025 budget can affect people in very different ways depending on their specific circumstances.
So it is absolutely vital that you do not make any big financial moves based only on what you've heard here. To really understand how these new rules are going to affect you, your family, and your business, and to figure out the best plan of action, you really must speak with a qualified tax expert.
And the team at ProTax Accountant is ready and waiting to help you navigate this new tax landscape. Whether you have questions about capital gains, you need to rethink your business exit strategy, or you have any other tax questions, they have the expertise to guide you. You can reach them directly on WhatsApp or by phone at the number right there on your screen. 07985 689 912, or you can just email them at info@protaxaccountant.co.uk. Don't leave this to chance. Get the expert advice you need today.